Charles Jim. Joining me today, as always, as my co-host Ryan Janot. Ryan, how are you doing today?
I'm doing good. The sun-tanned co-host, that is, and I guess we both enjoyed a weekend of sun and outdoor festivities for obviously the Mother's Day purposes. So
Yeah, we both have lobster faces right now.
yeah,
Well, today we're recording another episode, and the title of it is "Mastering Wealth: Strategies of High Net Worth Investors." And I know, Ryan, you and I have heard people say, how is it that the wealthy just keep on getting wealthier? Doesn't matter if the economy's up or down, the markets are up or down. Somehow they just tend to keep making money, right?
yeah.
And we're kind of looking at it as, okay, well, if there's a secret, what are those secrets? And if there are secrets, wouldn't we want to know what they are and kind of replicate what they're doing as well? So we
Absolutely.
decided that we're going to record a podcast to talk about what the high net worth people do to continue on getting wealthier. And I think, just for a spoiler alert, it's not rocket science, people. So we're actually going to go through a list of things that they do. And I think you've probably heard a lot of these before, right? But it's just funny how people lose track on following what they really need to do. I think the difference maybe between a high net worth person and someone who's not is the high net worth people probably have the discipline and the team to help them to build their wealth, right?
Yep. Yeah.
So, what's the first secret, Ryan, that's on the list? And it's in regards to investment strategies.
Diversification and the true meaning of diversification. So
Well,
yeah,
what is the true meaning of diversification? Because I think some people think that diversification means that they're going to have some mutual funds at one bank and some other mutual funds at another bank and maybe a couple of GICs with different institutions, and they feel that they're diversified. And then when you and I have done the analysis on the portfolios, they're really not diversified. They have different names to the mutual funds that they're holding, but when you actually look at the underlying holdings,
yeah.
they're very similar in nature. So let's talk about diversification.
Yeah, well, diversification is a blend of things. Obviously, it's discussing different types of asset classes. So obviously, we just mentioned having an asset class within some sort of mutual fund is just one small piece of that. But also for some people, more individually, things like stocks, bonds, buying real estate is another portion that can layer in alternative investments, which I know we'll probably get into when it comes to things like private equity, but also looking at your life insurance, using that as a strategy of diversifying your full investment strategy to make sure that whether something happens in the market that you're not fully all in on that, and when it goes down, that nice roller coaster ride. I'm sure everybody loves Six Flags, but the roller coaster ride that often happens with people and the timing. People love to time the market, which obviously is not a great strategy to be in. It creates a lot of heartache. So as far as those diversification, as far as like understanding what the different types of classes are, I don't know if there's anything else that comes to mind for you. I know we talk a lot about creating different guaranteed income sources also to really diversify your ability to be in the market and also at the same time lower your risk depending on your strategy and what your goals are. So, yeah,
Well, I think the first thing we can say is that I don't know too many high net worth, I don't know any high net worth investors that hold mutual funds, right? So a lot of people, that is their kind of their foot into investing. And that's fine. But a lot of high net worth investors do not put their money in mutual funds. They will place it in various asset classes like we talked about. So the mutual funds are great because for a small amount of money, you can diversify into various stocks and bonds and certain amount of asset classes, not all of them, right?
yeah,
Um, so high net worth investors do put their money in the stock market. They do buy things like fixed income investments, but you mentioned private equity.
yep,
And just for full disclosure, I am registered as a private wealth advisor through Raintree Financial Solutions. So private equity and private debt is something that we do offer as well. But they basically kind of place a certain amount of assets in the stocks and bonds, and that's where you hear in the news about the volatility in the markets because they're in the public marketplace. But then there's also private equity, and there's different ways that you can access private equity, and we're not going to get into the nitty gritty details today. We're just kind of high level. This is how high net worth investors tend to invest their money. They don't put all their money in the stock market. They don't put all their money in the bonds. They don't put all their money to private equity, right? It's diversifying into various asset classes. So that's another area that they invest in. Real estate, right? That seems to be a big one. And I know even regionally, some places have performed better than others. Overall, in Canada, real estate's performed well over the last, I don't know, 15, 20 years now. We're definitely dealing with a bit of a bump in the road. But let's talk about real estate a little bit more.
Well, I wish we had brought our gang, Sonia and John, in for this conversation. Well, obviously, like, high net worth people look at the value of homes going over time and having a little bit more. I find a little more control, but the high net wealth people are looking at commercial and residential properties, not necessarily individual single family homes, because they can really ramp up the cash flow that happens within some of these other real estate opportunities. So, and really take advantage of that as a real estate investment. Um, I guess for me, the most popular person that I can think of when it comes to real estate, I know there's one person, but we're not going to mention the name. Robert Kiyosaki, great example. Rich Dad Poor Dad is somebody that really talks a lot about real estate as the way to make money, and have a lot of cash flow coming into your portfolio. So, um, again, real estate is not for everybody. It is often a lot more than, as the social media portrays for it, harder to get into. But for real estate gurus like Robert Kiyosaki, they're often using other people's money when it comes to purchasing these things. So,
Well, that's definitely another one that actually is not on our list, right? Is typically high net worth investors don't use their own money.
yeah.
They use the bank's money or they borrow money to invest. But let's dig a little bit deeper into real estate because real estate can mean so many things to different people, right? Because I think
Mhm.
traditionally people think about real estate investing as, to your point, buying a rental property or two, right?
Yep.
But real estate can be land banking. You can buy land
Yep.
with the hope, or not the hope, but really the anticipation that in the future it's going to be worth something much more, and you can sell it to a developer.
Yep.
There's development. You can invest in development. You can invest in lending on development, right? And that's a part of real estate as well. You can purchase your principal residence, so not rent a place, but actually own your own physical asset. And then, of course, we talk about individuals who buy individual homes and rent them out, or buy multiple condos and rent them out. I think where the high net worth people really succeed is they look at doors, right? It's how many doors does a real estate portfolio hold, and some will focus on multiplexes, small apartments, because at the end of the day, if they have 15 doors in that one building
Hmm.
and two are not rented out, their financial situation isn't going to collapse because the bulk of the units are being rented out. There's still cash flow,
Yep.
right?
Yep.
It's the individuals, and the small mom and pops who kind of dip their toes into it, and they buy one single unit. And if it's not rented for a period of time, and they don't have cash to support it, they're in serious financial trouble, right?
Yep.
But it is the way to start. But there's other ways to invest in real estate as well. We're right now talking about active real estate,
Hmm.
meaning you're going out and buying the piece of property and renting it out and becoming a landlord. That's very similar to starting your own business and
Yep.
running your own business. There's a lot of risk associated with that, and reward, right? But you can passively invest in real estate as well.
Yep.
So passively, maybe you can talk a little bit more about passive real estate investments and what that is all about.
Well, if we're going to talk about hedge funds, as more of a passive way to gain money, and it's a more sophisticated way to adopt a strategy and allow yourself to gain capital within it. So for hedge funds, I'm trying to think of right now. I'm trying to think about the understanding or description of hedge fund.
Well, I want to go
Um,
back to passive real estate investing, right?
yeah,
Specifically, because a lot of people think the only way you can invest in real estate is by actually buying the property yourself.
yeah,
But there are programs out there. There's mortgage income corporation or investment corporations. There are real estate trusts where you have a bunch of investors who pool their money, and there are real estate or portfolio managers, real estate managers who go out there and buy the units and manage them and all that, right? So you
yeah,
can invest in real estate not just only by buying a condo or buying a home or a multiplex. You can also passively invest in real estate. And for some people, they'd rather do that because they don't have to worry about getting a phone call at 3 o'clock in the morning. I mean, that's one thing my partner John used to say to me all the time when we first partnered up. He's like, Jim, real estate, you'll get the phone call at 3 o'clock in the morning because the pipe burst. You don't get that in your investment portfolio. You don't
yep,
get that phone call, right? On the flip side, what you also don't get on the real estate is daily valuations that are fluctuating 1,000 points up or down every single day, which you
yeah,
do in the portfolio, right? So there's positives and negatives to both, but I think that the bottom line, what we're saying here is it's not all real estate, it's not all stocks, it's not all private equity. It's again holding a percentage of these asset classes because there will be periods of time where one asset class will outperform another,
yeah,
right? And then finally, with a real estate point of view, a lot of high net worth investors really look at the cash flow and they try to get to a cash flow positive situation. And then they use that money to either buy more real estate, they can build equity and buy more real estate, and then they start to multiply their assets, or they might take the equity and the funds and invest in businesses, right, or into a portfolio solution. The whole point is they're building equity, and then they're not keeping that equity locked up.
mhm,
They're unlocking the equity to help them build more wealth.
yeah,
And this is where when we talk about the difference between working with a banker and working with advisors like ourselves, the bankers always talk about accumulation strategy, right? Oh, you have X amount that you need at a future date. Well, if you give me X amount of dollars per month or per year at a projected rate of return, this is what it's going to be worth one day, right?
mhm,
And most people will invest that way, and that's how they try to build wealth. But we try to implement multiplication strategies where we try to utilize equity and assets to help multiply a person's wealth. That's how high net worth people build their wealth as well, right?
yep, yep,
So hedge funds. Again, I'm not going to get into the nitty gritty of hedge funds. We probably should have brought Denis on this one, right? Because I believe in the TVH wealth portfolios offered through Raintree Wealth Management, they do have some hedge fund holdings within the portfolio. And really, what they're doing is they're hedging um, some of their bets. And again, we're not going to get into the nitty gritty of it all. But bottom line is, hedge funds at times they are designed where they can make money when the markets go down,
yep,
and they also can make money when the markets go up, right? It's definitely a higher risk strategy, but there's some people who are pretty good at it, and better to hire someone to manage that part of your portfolio, and that's something that we offer
yep.
as well through Denis. What's the next one, Ryan?
Alternative investments, which is obviously Denis' favorite portion, which is cryptocurrencies. He's talking about them all the time, which is a big joke. Um, but also a lot of wealthy people buy art. I know gaining a lot of traction, which makes me feel like a kid again, is sports cards, memorabilia, things like that, collectibles. I know there's a gentleman out there that I can't think of his name right now that is very much been talking about this for the last 4 or 5 years. But you also kind of get burnt because there's those digital art that was super popular probably 5 years ago, and now a lot of them people were buying them for 10, 20, 30, 100,000. Now they're worth nothing. So digital art, you gotta be careful.
I was trying to get my daughter to draw because she's actually really good at drawing digital art.
Yeah,
And when they first came out, was it NFTs? I think they were called,
something
right?
like that. Yeah,
Something like that. And I was just saying to her, like, honey, come on, like, put some together and let's put it out there and someone might buy it for $1 million. She's like, no, my art is for me. Right. I'm like, okay. But it would
And
have been nice.
I feel like every day something else is going to come along as far as a different alternative investment, right? And it'll just
Mm,
continue to gain traction, and it'll be something. Next will be trading baseball hats. I know there's a huge one when it comes to shoes,
mm.
shoe collection. And
Yep.
funny enough, I have a nice pair of old Nikes from 25 years ago that have never been worn that maybe they could be worth something.
There you
So,
go.
yeah. Anyway, there's lots of options when it comes to alternative investments, but I would like to say you also have to be careful about what you're buying and becoming an expert at understanding. If I'm buying this Wayne Gretzky or Mario Lemieux rookie card, is there going to be value in it? And the different types of rating services that are used out there. A
Mm.
long time ago, I used to work on cruise ships, helping out the art auctioneers, and it was funny to see and hear them talk about which was of value and which were just garbage.
Yeah.
So that's the best way to put it. So
Well, and with the alternatives, I mean, 'cause I get the question as well. And I do say to people, there's nothing wrong with, again, holding a percentage of your assets into something like that. Because I know people personally who have built their wealth because of a home run situation, like
mm-hmm.
cryptocurrency, for example.
Yep.
I've also know enough people who have lost their entire wealth because they put all their money into something like cryptocurrency. And I think that the danger of it all is, and it goes back to the discipline. We're not Vegas gambling here, right? It is, yeah, hold some of those assets. We have no, again, the high net worth people. That's what they do. You're not going to see Warren Buffett, who's now officially retiring, put all of his billions of dollars in cryptocurrency. That's
Yep.
not how he plays the game. That's not how he built his wealth, right? It was definitely that very slow and steady approach, diversifying. He invested in things that he understood,
Yep.
right? That was very important. He invested in companies where he understood the people and knew the people as well, or got to know them before giving them money, because character was very important to him. So you want to put some money in crypto? Great. Small percentage. We're not sitting here saying don't do it. We're just sitting here saying don't do all of it, right?
Yep.
Into something like that, right?
And I find when working with high net worth clients, they're always finding ways to make sure that they're always liquid, that they're able to look for that next opportunity. Again, they have a team around them that is working to constantly find out what the next thing might be, or
Mm.
stock, or investment, housing, whatever it is. But you can see them going through cycles,
Yeah.
liquidity cycles, making sure that they have the right team supporting to make sure that they're liquid at the right time to jump on an opportunity. And again, we often talk about Warren Buffett, but he does say it often along with a lot of other opportunities or other entrepreneurs, which is when other people are running away, that is your opportunity often. And be less emotional about it, and instead, what are the facts? What do we know about this? So yeah.
Yeah. Yeah. So, in terms of asset classes, those are really the main asset classes that high net worth individuals are diversified in. You brought a good point. You talked about liquidity. One thing that we teach our clients is, doing things where you have use and control of your own money, right? Because that's what high net worth people value, is having access to capital to take advantage of opportunities. So some people will automatically default, well, what type of opportunities? Like, is there a buying opportunity in a business? No, there's a real estate buying opportunity right now. You know, condo prices are down, housing prices are down. If you're liquid and you have access to capital, now's a pretty good opportunity to get into the real estate market, right? In the stock market, for example, we were dealing with a lot of volatility recently. There was some really good buying opportunity in equities.
Yeah.
The high net worth people know when to get out when they're overvalued, but they definitely know how to get back in. So, a small little example that we talk about, Ryan, is when we hear people say, well, I'm going to aggressively pay off my mortgage.
Yeah.
And I can understand the psychological reason for that. However, what they're also doing is that they're giving up use of control of that money. So if you put a $20,000 prepayment on your mortgage and you need that for an opportunity, you can't get it back out. It's
Yeah.
done, right? So that's something that we definitely teach our clients.
And again, the history of learning that actually is a marketing tactic that I learned recently by banks, is they want you to aggressively pay down. That way, you lose control of your money. So it's very interesting to know that a lot of the habits that we've picked up are things that have been unfortunately sometimes taught through our education system, but also at the same time are essentially marketing. And I would say the person who had said this, a marketing scheme that has allowed us to believe one way or another. So, just again, as we've said many times before, making sure that you have the full picture, the education. There is a time and a
Mm,
place to be paying down your mortgage aggressively, but there's also a lot of times where you need to take the foot off the gas and
mm,
distribute that money in other places. So
for sure. So the next thing we're going to talk about is wealth management techniques. So one of the things that high net worth people do is they actually have a financial plan,
yep.
right? It's written down. They know what to expect. They know what their projections are. It's amazing, Ryan, how many people you and I work with that when we've asked them the question, have you ever put together a financial plan, a retirement plan? Have you written down what your goals are and the timeline and what it's going to take to achieve those goals? And I would say 9 times out of 10, we get a no, we've never done that before, right?
Yeah, yeah, and again, I will unfortunately dog on the bank a little bit because they're not offering this, and it is crucial that people understand to preserve wealth. You need to have a plan in place. You need to be working with a, likely a number of individuals, like we do at TVH Group, to make sure that each silo of your business, of your plan, your goal is being taken care of by an expert, a specialist, instead of essentially um, somebody that can't really help you or give you like the full outcome of what's going to potentially happen and give you tips along the way.
Mm,
Because if you go to your institution and they're trying to give you what the tax plan is on your retirement and tell you, hey, anywhere between 40 and 60% of this is going to go in taxes, they're not going to tell you that. They're just, as you said in the beginning, they're about just helping you accumulate that wealth, but
mm,
not actually creating any strategies in the back end. So it's important that you know for ourselves that we're providing tips and education to make sure that people are minimizing taxes, minimizing tax liabilities down the road, and really essentially optimizing, as we would bring in Denis for to
mm,
essentially talk about what does your estate look like. And we were just talking about this today about the number of people, which is hopefully going to be a podcast in the future, is the number of clients that we talk to that say my estate is fine, everything is taken care of,
mm,
but when push comes to shove and that person passes or they actually start digging through the weeds, they realize the estate is not ready for what happens when somebody passes and everything else that happens as far as closing the estate of that person. So uh, that's again a future podcast that we'll talk about. So
yeah. Well, the bottom line is I think a retail investor or a non high net worth individual, they focus on fees and rates of return,
mhm,
where the high net worth individuals, like you were saying, they focus on estate planning, tax optimization, and how to minimize their tax liability.
yeah,
Those are the strategies they're looking at, and they fully understand it. So, for a non high net worth investor, they believe that if they make an RSP contribution or if they put their money in their TFSA, that's tax planning.
mhm,
That's a small part of tax planning, right? But do you really know, like you were saying before, the future impact of that RSP contribution? And we recently did a recording with single seniors for tax fairness, and they were talking about the RSP blow up problem, right? That we're aware of,
Mhm.
We know what that looks like, what the impact of that blow up is going to be when a single individual passes away. But it's not talked about again at the retail level. And these are things that we're helping our clients with, retail or not, high net worth or not, right? I think what we're trying to share with people is a lot of these strategies that the high net worth individuals are utilizing to build and grow their wealth. These are the things we're recommending to our own clients who are not necessarily high net worth clients, right?
Yeah,
Um, Risk management, that's a big one.
it is, and I think it's for a lot of people, it's the scariest part of the conversation. And um, when it comes to the risk, I was telling a client, you know, you can do all the planning that you want, but especially for us, if the biggest single piece of that puzzle is suddenly gone from that equation, how the house falls, that there's no foundation on it. And when it comes to the risk is obviously seeing what kind of unforeseen events could potentially happen. I guess we all have a Superman ego that we're not going to pass. Nothing ever going to. I'm never going to get injured. Things like that. So, but it's planning in those unforeseen events. That's where again I find our job is the most effective, and also at the same time where people often shy away until something happens. And again, we've said this before. Everybody has a plan until you get punched in the face, um, and this often is being punched in the face for some people. So
Yeah.
what kind of importance are you talking, Jim, for risk?
Well, I mean, there's a couple of things. High net worth people do buy insurance.
Mhm.
First of all, I think there's a misconception that, well, you're worth X amount of dollars, you no longer need coverage. No, they buy a lot of coverage, and we're talking about people who put in hundreds of thousands, if not millions of dollars a year into insurance solutions in Canada, right? A big part of it is tax strategies, right? And again, we're not going to get into all the details of how that all works, but they use permanent insurance programs to shelter growth, cash surrender values, for example, from taxation.
Mhm.
They also use it for estate planning. And it's always cheaper, and you've heard me say this, is always cheaper to use the insurance company's money than your own money to fund a liability at death,
Yeah.
right? One of the things that we talk about with our clients is asset protection, also known as critical illness insurance, right? Like if you become critically ill and you are not able to work, or you need certain financial assistance, or you want to go to the States or somewhere else to be treated, not have to wait here 6 to 10 months to be treated. People get desperate. And what do? They sell their homes, liquidate their registered accounts and their savings, whatever else, to make sure that they can get the best medical care possible. Well, why don't you just get some asset protection so you don't have to liquidate your assets if you're dealing with a medical event? I did that. I lived that back in 2019, right? Where unexpectedly I had open heart surgery, and I didn't have to dip into any of my investments. I didn't have to dip into my line of credit. I didn't have to do all those things because I had an injection of capital that got me through that situation,
Yeah.
right? So risk management is a big one.
Mhm.
Um, this one I love, professional advisory.
Mhm.
So what this is telling me is that high net worth people are not going to robo advisory platforms because they don't give advice, right? Or if they do give advice, it might just be on their investments that you hold with them. They're not really giving that whole, full, holistic advice. So professional advisory is a big one. So maybe you can talk a little bit more about that.
Well, you hit the nail on the head, which is when it comes to any sports athlete or any major leader, they always have a team around them, right? Every team is there to help support and direct and uh, you know adjust the plan as it's going, whether it's a knee injury or creating a career that's longer. The same thing happens when it comes to having professional advisory team around you. um, I see this time and time again from uh, the the Warren Buffetts to any other. significant high net worth person I see, they have a large team that has their best interest in mind and is trying to make them wealthier. They're trying to protect them in case the worst case scenarios happen. And they're ensuring that they have legal advice and advisors that are helping manage all these moving parts. And again, not everybody that we work with are high net worth, but it doesn't mean anybody can't have a small team around them to help make sure that they're making the right steps or taking the right steps to ensure that at the end their goals are being met, they're being supported, and they're getting the right education to make sure that they're making the right decisions along the way, and not relying on Tim the Toolman Taylor's neighbor across the way, which I'm sure I just dated myself on that one too. So
Yeah, you did. Um, but no, you're right. I mean, working with us, our clients have access to an advisory team, and it's an advisory team that we work together on behalf of our clients. And the advice comes from, again, we provide the financial advice, the retirement advice, the risk management side of things. Within TVH, we also offer the mortgage lending advice. So for people who are looking to use the bank's money to build their real estate portfolio. Plus, we also have John, who has multiple rental properties. He's been in the rental business for many, many years. So he coaches clients through that whole process as well. We have the accounting side, so we can try to do things as tax efficiently as we possibly can and report as well on an annual basis. We have the legal side as well that offers advice. We have the portfolio solution. We have access to private alternative investments as well. Like we offer it all. So a client working with us, you don't have to have $1 million, $10 million to work with us, right? We will start off with young family starting, putting their first foot into the investment world, and we will work with them all the way through to when they reach a point where they are financially successful. But you have to start off from day one because you're going to make a lot of mistakes along the way if you try to figure it out yourself, or if you're listening to different people's advice because their financial situation may be different than yours, right?
Yep.
So really what we're kind of presenting here is the fact that we can be your advisory team if you choose to work with us. So professional advice is a big one, and as you mentioned, high net worth clients, they have advisors that help and support them. They don't try to do it themselves, right? And for those high net worth individuals who are very good at running their business or whatever it might be that help them build their wealth, by hiring the advisors to deal with other aspects of their wealth, it means it just frees up their time to be able to still focus on what they're really good at,
yeah.
right? So that's very important. The next word I always struggle with saying it, philanthropy. I think I might have I got it.
I'm glad you said it. So,
Yeah,
uh, but it's true with high net worth people. It's about the successful ones that I work with, the ones that I know too, is that it's really about giving back, um, and making sure that they're giving back in meaningful ways, whether it's leaving the right legacy for their own families, or donating some to charitable foundations, and that there's a number of different strategies that people can use with their own life insurance policies to help fund and create foundations for that matter on their behalf, their families' behalf, and the impact that can have generationally. Um, and it feels good to be able to work with somebody that's being able to leave an amazing legacy, um, to help others.
yeah,
So
for sure, for sure. So the next one is lifestyle management. And the one that we can kind of help with is the family office aspect. We are a family office where we can handle most of an individual's financial needs, right? In managing their, like we talked about, their wealth management needs, their debt management needs, um, protecting their wealth, tax liabilities, minimizing tax liabilities. So it's all done within the TVH roof, right, in terms of the family office.
Yeah.
So high net worth individuals, that's what they do, is they hire teams like ours to help manage their finances,
Mhm.
right?
Yep.
And you
And
don't really get that at the bank. You don't really get that at a robo advisor platform, right?
yeah, I think you've said everything, so there's no point in me repeating
Okay.
repeating
So
that. So
the last one on this lifestyle management side is, and this is something we don't offer. I don't know if we ever will offer, but it's possible.
never say
Is
never.
concierge services.
Yeah.
Right now, I think from what I've seen and I've read and I've researched, the concierge services really are offered to the ultra high net worth. The billionaires that are out there, and they'll hire a firm. Sometimes the family office will also offer the concierge services. Sometimes they're separate, right?
Mhm.
But that's who you would call for anything. You need to book a party. You need to fly, across the world somewhere. They'll set up all the travel plans, everything,
Yeah.
right? But this is definitely ultra high net worth level that you and I are not. We don't play in
Yet.
that. Yeah, we don't play in that yet. But that is kind of the final lifestyle management service that high net worth individuals look and expect, right?
Yeah, a lot of it comes down to when it comes to the concierge services, which is really about freeing up their own time, right? So they can do the things that makes them more money. Really, what it comes down to. And I know we've had this conversation before too. Just simply like doing your lawn care. What is the value of doing your own lawn versus perhaps hiring the kid down the street to do the lawn, right? And that frees up more time for yourself to do other things that hopefully will create more wealth for you, free up more time to do the things that you want to do instead of cutting the lawn, which I don't like doing. So
Well, I think, and not to pick on you, but I think our second meeting we ever had, that was kind of like a lesson that I think I walked you through, right? Because I remember we were meeting for lunch,
yeah,
and I think you were a little bit late,
yeah,
and it was because you were looking for parking.
yeah,
And I remember asking, well, where did you park? Like, we have a place like right across the street. And at the time, they're like, I'm not paying $30 for parking. So I made sure I'd found something cheaper.
yeah,
And I think you found something for like $15 or $20.
yeah,
And you were very proud of yourself that you did that. And the question I asked you was, how long did that take you? You said, oh, about 30 minutes.
yeah,
And I'm like, and you drove around, and what's your 30 minutes worth in
yeah,
terms of your income potential?
yeah.
And I don't think you ever thought that way. I don't think anyone asked you to think that way, right?
Hmm.
And when we broke it all down, it cost you more spending 30 minutes to save $10,
Yeah,
right? Because it actually cost you more because of the income that you weren't able to generate over that 30-minute period, right?
yeah,
That's how high net worth individuals think,
yeah.
right? Because
Being
that's
able to,
one thing that we can't really buy or change or anything is our time, right?
yeah, yeah. Well, it comes down to that. Yeah, it's the time piece, right?
Mm.
It's something that is essentially priceless that is given away very quickly, and trying to put your ego, even though I beat the system and I found the $15 parking, putting ego aside, and the ability to understand that freeing up certain periods of time for yourself can help your wealth, your wellness, your mental health, a lot of these things very easily. And again, we often work with a lot of clients from our financial coaching piece. Is how do we truly help our clients with their full financial wellness and their wellness as a whole because of
Yeah.
kind of our network of people within the TVH group to connect people, whether it's networking, resumes, their own wellness, yoga, like all these things that
Yeah.
really add, really kind of almost like a little concierge service that use
Yeah.
the network of people, trusted people, right?
Yeah.
So
Yeah.
yeah,
Yeah, and I think you learned the term lost opportunity cost,
Yeah.
And no one really thinks about the lost opportunity costs. And that's definitely something we highlight with a lot of our clients when they're looking to make some sort of financial decision, right? We
Yep.
focus on that. So I think that's really, again, not rocket science, people. Like, I mean, I thought we were going to uncover something that we've never heard of before, and what do they do, and we're going to be able to do this now and replicate it, and well, we have, right? There really is no magic solution. It's you just need to follow these steps. Um, don't again put all your money into the one asset basket like a lot of people mistakenly do. The S&P 500 was a perfect example. I had people say to me, "Well, why wouldn't I put all my money in the S&P 500?" And then they found out why, right? And I think our next episode, Ryan, we're going to be talking a little bit about the lost opportunity cost of aggressively paying down your mortgage.
Yeah.
I think that's going to be one of our next episodes. So I'm looking forward to that one, because I think that's where we're going to be able to talk about examples as to why it might not make sense for you to aggressively pay down your mortgage. I know psychologically it feels good, right, to wipe out that debt. And I know that for many years from our parents, we've been told to pay it down as aggressively as possible. But, there's a huge, significant lost opportunity cost in that decision.
Yeah.
Right.
Yeah.
So anything else you'd like to say before we say goodbye to the fine folks?
Obviously, there was a lot to learn about what high net worth people are doing and the ones that we work with, and how to really free up time. And again, it's, as you said, it's a lot of simple steps. And I think one of the other things to add to it is I find high net worth people read a lot. That's a big thing. Make sure you read and learn something new every day.
Do they listen to audiobooks? Because that's what I do.
Yes.
Okay. All right. I feel better now. Well, listen. Yeah. Okay.
tvhfinancial.ca. Catch us on any social media: Facebook, LinkedIn, Instagram, TikTok.
Or 647-727-4668.
And the phone number. Yes.
Yeah.
Thank you, Jim.
All righty. Well, and we also encourage people to like and share, because we're finding there's a lot of momentum now that's picking up from a lot of our content. People are reaching out to us, and they like what they have to hear. So we encourage you to like and share as well if you're able to. So Ryan, great episode once again. Until next time, we'll see you guys soon. Take care.
Take care.